Hi there, traders. This is Brad Gilbert with today's trading action. All right, it's Thursday, the 15th of Feb, coming into the Asian session. Now, just looking at the chart, see where the major currency pairs are leading out of the North American session. You can see how that new strength in the US CPI numbers has been factored in. And this is the new, I should say, fair value for the dollar, right? So, but as you'd expect with moves like that, it was a bit of a overcorrection, and then you sort of get that little bit of a trickle back, and you can see that a bit more prominent on Aussie. So euro, sterling, Aussie's bounced back a little bit. So has Kiwi, dollar, CAD's back a touch. You always see that little bit of an overshoot, right? So, but the market, think of it this way: the market is now primed. This is everything factored in. This is where we are. So, and that brings in the possibilities of, okay, so what could make this move? Well, it's the economic numbers, right? Now, if I just come back to trading economics, just to run through them, and I'll give you a little bit of a look at News Squawk as well. For the Aussie dollar, right from now, from this fair value, we've got the employment change, right? Big numbers. We've seen employment across the board over this sort of holiday period, December, January, really go through the roof. So it's going to be interesting to see what happens here. There was a massive fall off in full-time employment. The unemployment rate, 3.9. So they're expecting a little bit of a blowout, the unemployment rate, but a bit of a correction in the employment. Now, there will be potential action here on the Aussie, right? So what I would do with that is I look at the instrument and go, okay, what's happening here on this instrument? Well, on the hourlies, you can see very clearly it's moving down. Okay, it snapped through that sort of the only support level we had. It's come back and retesting it. Now, the easiest trade here, and this is straight in line with what's going to happen with the employment numbers. If the numbers come out weak, well, the path of easiest resistance is down, right? And the good thing is you've got a resistance line on the top here to put your stop above that, and Bob's your uncle, right? That's an easy one. Now, for those traders who say, yeah, we get a really strong number, well, there's a chance for it to sort of come back. I mean, I can't see it, unless it's really strong, I can't see it breaking through that resistance. If anything, the Aussie, the overall trend is down. So to me, it's a selling opportunity, and the best one is those weaker numbers. So you just have to focus on the numbers here. Look at the range. Obviously, is the key to it. So the expectation is of a change of plus 30,000. 10 to 55 is the range. That's a pretty big range, but below 10, that's where it's going to get some juice to the downside, right? And obviously, the rate expecting 4%, 3.9 to 4%. So below 3.9. That's a stronger number. That would counter a weaker employment change. You want both of these. Well, you need a higher unemployment rate, right, and a lower employment rate or employment change to get that move on the downside. We've got a great setup. Aussie's trending down. That's the low risk trading opportunity, right? So that's what I can see there. Now, if I come back to the calendar, right, we've got a few things, right? There's a few opportunities here for like a little bit of a trade. Then when we get into the US numbers, it's a little bit more progressive because the US numbers have all been strong. If the US numbers back up what's been happening, employment, CPI over that sort of holiday season, as I'm calling it, well, then we are going to see the next leg of the move in the dollar, right? It's like, yep, this is really happening and the dollar will move. But before that, we've got a bunch of numbers here out of the UK. GDP numbers, traditionally very important. And then to me, the manufacturing production numbers is one of the key numbers. So we've got a couple of numbers here in the UK, which, obviously creates opportunities. You're looking, 5 or 6 hours before the US numbers, right? So just looking at sterling, you go through the same process, right? Check out, okay, what's happening here? Well, on the hourly sort of perspective, and I'll show you the dailies in a second, yeah, sterling is on its knees. We had some really good employment numbers, shot up. The US CPI numbers really crushed it. So it's sort of sitting here. This is fair value. I think there's room for it to go up or down at this stage. But the US numbers, as you can see from the US CPI numbers, the impact it had on the downside of sterling will probably dominate the overriding move. But right now, on those UK numbers, okay, if I just come over here, the GDP, just keep an eye on these things, right? There's not a huge amount of information here with the range, but the expectations, obviously, negative numbers, a couple of negative quarters of of GDP. You're talking recession. I mean, it used to be a dirty word. No one really cares anymore. But just keep an eye on those UK numbers. There's bits and pieces there coming up for grabs. But as I said, when it comes down to that North American session, we've got retail sales coming out, amongst a bunch of other things, the weekly initial jobless claims, industrial production numbers. We want consistency across the board here. Now, as I said, if these numbers are strong, right, it's going to do a lot for us in the sense of, like, take out any subjectivity on what's happening here on the charts. What we could be seeing is, if the numbers are strong, a break higher here on the dollar index will drive euro lower. It should also lead to a higher dollar Swiss. We're basically at some key levels on the daily charts, and that means we might see it run, right? The market's already factored in the stronger CPI numbers from the other day. This is a chance to get that next leg of the move, right? So to me, today's trading action will really focus around, like, individually, right? You've got the Aussie. So look at the Aussie against some of its crosses. That is a prime example. You've got the UK GDP manufacturing numbers. Okay, give sterling a chance to do its own thing. But once it comes into that North American session, right, that's where we are going to start to see the US numbers dominate once again. And we've got a bunch of them: Philly Fed manufacturing, industrial production numbers. They are all pretty sort of key parts to the equation, right? And don't forget, like the other day, we had strong UK employment, and then that was just smashed lower on the US numbers. So if you are trading Aussie and, say, sterling, well, when it comes to the US numbers, factor it in, right? So if we get really strong employment numbers in Australia, and, say, really good numbers in the UK, but then, you know what, we get really solid numbers in the US. The US is already trending. That will dominate, and these pairs will go down regardless of what the data was, right? So now on the positive side of that, if we get, say, weak Aussie employment numbers, weak UK data, and we get stronger US numbers, well, you're going to get a very big move. I was going to say decent, big, whatever. On Aussie will go down a long way. Sterling will go down a long way, and the others will dribble with it. So pretty much a good one where you can connect the dots on the fundamentals and really get some action. All right. That's my sort of pick of it. Don't forget to keep an eye on your daily charts. Look for those longer term levels. When you're transacting or executing, it's the hourly charts, and a lot of these things are primed, you know, to keep going. A little bit of a retracement here. We get weak sterling. I'm a euro. Euro will go down. So will sterling. Sorry, that's what I was getting to. And so, like, everything's primed for the US dollar to keep rallying, right? And today's US numbers can confirm that, and we might start to see, like, a medium-term trend come up. Because in my mind, this is the issue that you might end up with is, I'm like, these seem like a seasonal adjustment, right? And I'm thinking the next round of numbers, we'll see US dollar weakness and everything correct. Great trading opportunities coming up. But I got to get out of my head and just think, no, this is what's happening. The numbers have been stronger. The US dollar is going up. So that's what I'm doing, right? You've got to shrug off some of your own stuff to really get things, or just make it clear for you. Now, just on looking at what's going on, bit of a risk on day here, like bond yields, okay? I was talking about this yesterday. Prices up, yields down, right? That's why the US dollar's given back some ground. The majors, not exactly sure what's going on here at the moment, but that's where the numbers come into play. All right, lots of explanation there. Just try and focus on one thing at a time. I'm sort of tying a lot of things together, which takes a bit more experience. Aussie employment numbers, UK GDP, manufacturing numbers, and then into the US session once again. All right, guys, good luck. All the best. Cheerio.